Telekom Malaysia Berhad, TM, the National Connectivity and Digital Infrastructure Provider and Malaysia leading integrated. It is originated in 1946 as the Telecommunication Department of Malaya and became Syarikat Telekom Malaysia Berhad in 1987 after being corporatized. It was fully listed on the stock exchange in 1990 and in 1991 the name was officially changed to Telekom Malaysia Berhad. What is TM? TM is Malaysian leading integrated telecommunication and digital service company. Established from the former Jabatan Telekom Malaysia, TM has grown from being the national fixed line operator into a modern technology-driven corporation that provides broadband, data and digital solutions to individuals, business and government sector. As the owner of the largest high-speed broadband network in the country, TM play a key role in supporting Malaysia's digital infrastructure and national development. MFRS 8 operating segment is a component of an entity that engages in business activity from which it may earn revenue and incur expenses, including revenue and expenses related to transactions with other components of the same entity, whose operating results are regularly reviewed by the entity chief operating decision maker to make decisions about resources to be allocated to the segment and assess its performance, and for which discrete financial information is available. Chief Operating Decision Maker (CODM) is a function, not necessarily a job title. CODM is the person or group that allocate resources to and assess the performance of the entity operating segment. In practice, CODM is often the CEO, Managing Director or the executive committee that review segment results regularly. The key test is whether the person or group use the segment measure to make resource allocation decision. The two examples of CODM in Telekom Malaysia Berhad is Ammar Huzaimi Madris, the Chief Executive Officer who oversees the company management and day-to-day operating, and Chairman Datuk Zainal Abidin Puteh who provide leadership and approve strategic plan and policies.
Okay, for this part, I will explain the two types of segmental report used in financial reporting of Telekom Malaysia, which is geographical segment and business segment. For the geographical segment, it refers to reporting financial information based on the location of customers or market where the company operates. And for the business segment, this refers to reporting financial information based on the different lines of business or service that a company provides. Each segment usually has different customer, different risks and different levels of profitability. Now let's look at snippet of geographical segment from the Telekom Malaysia segment report, which shows Malaysia contribute RM10,530.4 million while other countries contribute RM1182 million. This shows that TM is highly dependent on the Malaysian market with more than 90% of revenue coming from local customers. This means TM's financial performance is strongly influenced by Malaysia's economic environment. At the same time, it also shows that TM has relatively low exposure to foreign markets, which limits international growth but reduces foreign currency risk. Snippet of business segment, it is divided into several categories, which is B2C, which contribute RM5633.3 million, business to business with RM2906.2 million, carrier to carrier with RM3061.4 million, and others are shared service with RM282.6 million. From this, we can see that the business to consumer segment is the strongest performer, which generating the highest revenue. The first key benefit of segmental report is show exposure to different economic environments. Geographical segmentation provide insight into the economic risk faced by the company. From Telekom Malaysia report, RM10.53 million of revenue comes from Malaysia, while only RM1.18 million comes from other countries. It indicates that TM is highly dependent on Malaysian economy. If Malaysia experiences economic slowdown, TM's performance may be affected significantly. Such information help users make more informed decisions. The second key benefit is helps assess performance of each business activity. Segmental reporting helps financial statement user identify which business area are performing well. For example, Telekom Malaysia business to consumer segment recorded the highest revenue at RM5.63 million, and this information allows investor, analysts and management to evaluate which segment drive the company's growth and where resources should be focused.
Now, I will explain interim financial reporting under MFRS 134. MFRS 134 requires companies listed on Bursa Malaysia to prepare interim financial reports quarterly or half-yearly instead of waiting for the full financial year. Interim reporting means preparing financial statements for a shorter period such as 3 or 6 months. The standard provides guidelines to ensure these reports are consistent, reliable, and comparable with annual financial statements. It also requires comparative information, so the current interim results must be shown together with the same period from the previous year for easy comparison. The company must at least prepare a condensed financial statement of financial position, profit or loss and other comprehensive income, statement of changes in equity, statement of cash flows, and last but not least, selected explanatory notes. The notes cover changes in accounting policies, significant updates since the last annual report, dividends, and any other material events. Overall, MFRS 134 ensures companies provide timely and transparent financial information to users throughout the year. For the first significant event, Telekom Malaysia recorded a very large dividend payout during the period. The company paid RM479.7 million for the second interim dividend and RM230.3 million as a special dividend, totaling RM710 million. This major cash outflow reduces TM's cash balance and lowers retained earnings, which then decreases total equity. While dividends don't affect profit, they impact liquidity and the company's overall financial strength. It shows TM's commitment to rewarding shareholders, but it also means fewer internal funds available for future reinvestment. The second major event is Telekom Malaysia's RM150 million investment in a jointly controlled entity. This is a significant cash outflow that reduces the company's cash balance while increasing its non-current assets. That investment usually supports long-term projects like technology expansion. Although it doesn't provide immediate profit, the joint venture's future performance will influence TM's result through its share of profit or loss. Overall, this transaction shows Telekom Malaysia is reinvesting for growth and strengthening its long-term capabilities.
Next is interim reporting periods. Telekom Malaysia Berhad has a financial year that ends on 31st December and prepares its financial reports every quarter. Based on the unaudited condensed consolidated statement for the second quarter ended 30 June 2025, the reporting period are as follows. The first one is statement of profit or loss and other comprehensive income. For the current interim period in quarter 2 2025, the 3 months period is from 1 April 2025 to 30 June 2025. For the cumulative year-to-date results, which cover 6 months, the period is from 1 January 2025 to 30 June 2025. For the comparative period in quarter 2 2024, the structure is the same. The 3 months period is from 1 April 2024 to 30 June 2024. The 6 months cumulative period is from 1 January 2024 to 30 June 2024. This ensures that users can clearly compare the current quarter with the previous year. The next one is statement of financial position. For this statement, Telekom Malaysia presents its current financial position as at 30 June 2025. The comparative position is at 31st December 2024, which is the most recent audited financial year end. This follows the requirement of MFRS 134 to use the later year end figures as the comparative amount. The third one is statement of changes in equity. For the statement of changes in equity, the reporting period covers the same 6 months period used in the income statement. The current period is from 1 January 2025 to 30 June 2025. The comparative period is from 1 January 2024 to 30 June 2024. This includes movement like retained earnings, reserves, and any dividend declared. The last one is statement of cash flows. The statement of cash flows also use a 6 months reporting period. The current period is from 1 January 2025 to 30 June 2025. The comparative period is from 1 January 2024 to 30 June 2024. This helps users understand how Telekom Malaysia manage its operating, investing, and financing cash flows. As conclusion, by clearly presenting both the current and comparative reporting periods for each financial statement, Telekom Malaysia meets the requirement of MFRS 134. This provides users with transparency and allows meaningful comparison of the company's interim performance and financial position.